Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day. Bitcoin has seen the breakdown of a 2-month-long horizontal support at 101.5k, resulting in a very aggressive and very sharp correction into the $98,000 region, filling that low historical resistance range. With this, we have also seen the weekly close occur, printing the deviation set up from the prior weekly range high at 104.5k, as well as the confirmed breakdown of the 62.09 on the RSI. Bitcoin has now dropped over 8% since we have been discussing the risk of these high time frame pullbacks since around 107,000. In today's video, we are going to be taking a look at both the weekly and the short term, discussing what is happening, what to expect next, potential target levels, and so much more. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP community, you can do that by clicking the pinned comment of the free channel, contact our admin, check out our 53+ month trading track record, or if you're interested in finding out what you'll get access to and how it all works, go ahead and click this link. That takes you to a 10+ minute video showing you inside both the main channel and the exclusive group chat. Go ahead and check it out. We have over 700 members. We'd love to have you in there. Let's jump into the content. So I'd like to start by saying, guys, congratulations to everyone who's been paying attention to the charts, to the data, and remaining objective and emotionless. For quite some time now, we have been discussing the warning signs that had been developing on the weekly chart. As far back as the end of May, we were discussing this up around 107 to 110,000. We officially stated that for the first time in over 900 days since our pivot at 16.5k, we went from a macro bullish sentiment to a neutral to bearish sentiment. And we've said that we would remain neutral to bearish, potentially turning bearish if the charts continue to develop to the downside, while Bitcoin remained under 110,000. So we perfectly timed that sentiment shift right at that local top for Bitcoin. Again, today we're going to be discussing how the high time frame charts are looking, whether or not we're going to go see a continuation lower, or even where reversals could develop from. So we'll jump into all of it. Let's start on the market data. 24-hour liquidations and volume. Obviously, with escalations occurring in Iran, we have seen a large amount of fear coming to the market. Now, this is just one of the reasons that's really catapulted the price toward the downside. A whole variety of other things, of course, but one of the main economic, or should I say, geopolitical and global conflict generally does result in a bit of fear in the market, which can push the price toward the downside. But we have seen with that volume increase 69%, 346 billion, 24-hour liquidations up 6%, still very high, 667 million, with 535 million of those liquidations actually coming from long positions. So again, a lot of long positions getting chopped up on this downward move. And if we take a look at that downward move here, since yesterday's video, we did see a correction here of yet again another 4.5% over the course of a few hours toward the downside. So again, quite a brutal move downwards here for Bitcoin, currently sitting underneath that major 2-month-long horizontal support. We'll come back and discuss that in a moment. The DXY has opened up. Again, it is currently a little bit red over here, watching how that develops into the new week. Again, provided we do remain underneath this low at 100, the expectation is that we come down. We have had a bit of a sentiment shift here in regards to the macro expectations for future interest rates, particularly the median rate forecasts for 2026 and 2027, with that adjustment actually going upward a few percent, or a few 0.1% or so. We have seen the DXY push upward very so slightly during the week of which that was announced. So whether or not we see this continue to push the dollar up over the next few weeks or not is something we're going to have to wait and see, particularly with the conflicts around the world. If that does escalate, we generally do see the DXY, the US dollar, gain strength. So that is something to watch. So it's very hard to give an overall assessment of where it's going to go in the short term, but the overall macro assessment right now is while we remain below 100, we can very well still see that 93 to 92 target in the higher time frame. Something to watch over the next few weeks. The S&P 500, let's take a look at this. We opened up green. We actually dropped downwards into around this 5,960 level. We have opened up green over here, but the warning signs that we were discussing are still prevalent. They're still on the chart, and that being the bearish divergence represented by higher highs on the price and higher lows, lower highs, sorry, on the RSI. Again, representing that although we are on an uptrend and the uptrend is intact, we are seeing weakness, we are seeing exhaustion here, we are seeing buyers starting to lose control of this trend. So we could potentially see that develop into a correction here, maybe to that 200 and that 50. So watching those levels, all in all, provided we remain above 5,700, okay, this gray level here, prior levels of resistance, prior levels of major support, provided we remain above here, even if we were to see a correction, it would still be considered a healthy correction before a continuation. So 5,700, if you're looking at the macro outlook, in my opinion, that is the most important level on the chart. If we're looking for points of which you can become immediately bullish again, that would occur upon the breakout of our prior weekly high, or when the RSI breaks through the trend line. And one of those two instances will unequivocally increase the probabilities of the price continuing higher. And that is it for the broader markets, guys. Let's jump into Bitcoin, because we do have a whole heap to be taking a look at. There is just so much going on, and I think this week coming up is going to be a very, very volatile week, of course, with Iran and the US and all this news. Really anything can happen in regards to how those conflicts develop, and we know already how emotional and how responsive the market has been to even the smallest developments in regards to that conflict. And if that does continue, we should expect the market to continue to be reactive and continue to be volatile. And of course, since there is a looming risk of that conflict escalating, if there is any sort of risk, it is that we have this downside risk for the market. So let's jump into Bitcoin, guys. A quick word from BitGet, BitUnix, and BingX. If you were interested in supporting me making this content for you on a daily basis, if you were interested in getting some exclusive bonuses such as a sign-up bonus, access to all of our exclusive campaigns and giveaways, and a lifetime trading fee discount of 15%, which can build up to 45%, go ahead and sign up to the links using the description down below. You'll get access to all of that and more, including supporting me and supporting yourself trading on exchanges I trust. Go ahead and check it out. We'll play an ad and we'll get right back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get stuck back into it. So let's talk about the short term first, and then we'll jump into the weekly, because again, a lot of people are starting to talk about the weekly now. They're starting to see the things we were discussing many weeks ago, whether it be the bearish divergences, whether it be the weakening momentum, whether it be the deviation setup. There's a lot going on here that we need to unpack, but let's start with the short term first and foremost. So at the moment, Bitcoin has broken below this high time frame level of support. This high time frame level of support, if we're going to go ahead and mark it out, was simply spanning between about 101,500 into our sell-side liquidity, which we've come back to retest now at around 100,700. So that is being currently retested as we speak, where we have officially broken below. Now, if you have been paying attention to the videos, for the last few weeks, we were essentially discussing that if we were to see a break of this range low, we would enter what we would call a low historical resistance range. Now, a low historical resistance range is just a acronym for what, well, it is an acronym. LHRR is the acronym for a low historical resistance range, but what it essentially is, it is a gap on the VIPV. So it signifies a range of price action, so a range being between two horizontal price points, so this is a range of price action where the historical trading price action, so the historical price action here, saw a dramatic increase in volatility. As we can see, a large increase in volatility. Hence, there are little or much fewer historical orders within that range in comparison to a range such as over here. This results in a low historical resistance range where the volume requirements for the price action to move aggressively in a downward direction if breaking down or a upward direction if breaking up, such as over here, dramatically decreases. So even though we might not see massive amounts of volume, that doesn't really matter. The volume itself can be misleading because volume without applying the context to the required amount of volume for the price to move becomes misleading, okay? So since we have a context over here, which is the volume requirements are dramatically lower here than here, even sometimes with smaller amounts of volume, we can see large liquidation moves, which is exactly what we have seen. We've seen this massive move downwards into this low historical resistance range, resulting in $600 million in liquidations. Now, no matter which way you spin it, some people are going to say, well, this wasn't a crash. Other people are going to say, well, it was a crash. The reality is a 4% pullback in Bitcoin in 4 hours in a multi-trillion-dollar asset is objectively a crash, because a crash, again, the word crash is contextual to not only the percentage change, but the speed of which that change occurred, right? If we see a 4% pullback over the course of a month, yeah, that's not a crash. If we see a 4% pullback in the case of 20 minutes, yes, that would be considered a crash because the impact it has on the market is more severe. So yeah, we did see a crash here in that low historical resistance range. At the moment, we are sitting underneath this level of resistance. This is now a level of resistance. The next level of support for Bitcoin is sitting right over here. This next level of liquidity at around $96,000. Now, of course, we've got short-term support as we depicted in our prior videos, around 98,000 downward into 96 is where we'll start to see the price exit this low historical resistance range. So volatility will slowly begin to diminish again as we approach that $98,000 region. Now, with that, we have also seen the total cryptocurrency market cap bounce at that 200 moving average and the $3 trillion level, which lined up again with that retest at 98,000. So we had now seen a small reversal develop from 98,000 to retest yet again this point of resistance. So provided the price action does not get back above this 101.5k level, the overall directional expectation is that we can continue down to 96. Or at least we attempt to continue down to 96, because nothing in trading is a certainty, all right? There's only probability. That is the short-term chart. If we are taking a measured move analysis from the range high to the range low, remember, if we just delete this midline over here for a second, this was a horizontal consolidation. A measured move analysis applied to the breakdown point does suggest there is potential we could see the price drop all the way down to the lowest point of support, okay, which is sitting at $92,000. So again, if we take a look at 92,000 in a higher time frame, below 92,000, we have yet to gain another low historical resistance range, which should take us into 89,000. So again, the downside targets become plausible now that we have seen the breakdown of the horizontal consolidation and the weekly range high. Now, although these levels probably seem quite, I guess, ambitious, not ambitious, what's the word? Speculative, maybe speculative, because we have little to no data over here. When we talk about the $89,000 level in just a moment, the $92,000 level, you know, the $96,000 level in just a moment, the weekly, it does line up with some very important levels, such as that $89,000 level. It actually lines up pretty well with the Gaussian channel upper band. We know that already, that the Gaussian channel upper band is essentially the bull market support, right? If we lose the Gaussian channel upper band, a level we have been above the entirety of the bull run, since the bull run began over here, we will enter a bear market. So we have some confluence here from a technical perspective to validate that these levels here are not just random levels, they are levels of technical high time frame support and relevance. So that is it for the short term, guys. The short term is bearish. We have broken down. There's no doubt about that. While we are below this level of support, the expectations are downwards. Regardless if we see chop, we will likely and most likely see some sort of attempt to reclaim this level, which even whether or not this is the attempt or whether or not we push back into it, there is a chance we do see that attempt. But again, while we have this pattern of highs, lower highs, lower highs, lower highs, lower highs, the direction of the trend is downward. So until we break through one of these lower highs, well, next one is sitting around 102,700, the expectation is that we move toward the downside. So to put it simply, and as I just said, and how you could probably derive what I mean from that, is that if we break back above 102.7, there is a chance the bulls could reclaim control again. But again, even if they do that, they will need to close a weekly above this prior weekly high, above 110,000, to turn the weekly charts bullish again, because the narrative, the sentiment has shifted. We've had, again, a consolidation. We had absorption, a positive momentum shift, into a continuation, into a weekly high, into a correction with absorption, a positive momentum shift, into a break of the weekly range, and then we had a failed continuation. So we had a change of the trend we have seen here. Now we have seen a deviation from the range high, thus this is an assumed local top. So when we see any sort of local top, to expect bullish continuations, we need to see continuations through that range high to be bullish again, or we need to see the price action retrace into a level of demand for the price to then develop a new consolidation, absorb the selling, and continue upwards, okay? Again, trading level by level. That is it for the short term, guys. We'll say it again. Pray for the best, plan for the worst. That is how you trade when it comes to invalidation setups, okay? Pray for the best, plan for the worst. So if we see the news come out, we see conflicts de-escalate, yeah, there's a good chance the market could rally again, because one of the main reasons we've seen this dramatic and quick correction is because of that, right? So yes, there is a chance we see moving into the new week, we see conflicts de-escalate, we see peace be made, and we see the markets rally. Absolutely. Now, who doesn't want that? Everyone wants that. That'd be fantastic, right? Not only from a market perspective, but from the world perspective. No one wants to see these conflicts, which will be fantastic, and the market will rally as a consequence. And that's why I always say, a lot of people now that we have seen these breakdowns are only now turning massively bearish. The reality was the time to sell, the time to flip bearish over here or neutral was up in this range. We could see the price continue. We'll talk about that in a second. It's very likely we do. But if on the off chance we don't, because we get this positive news, well, then the market will push back up again. We need to be aware of that. So let's talk about the weekly chart now. From a structural and a technical perspective, there's no doubt about this. This is bearish, okay? We have seen a deviation confirmation now, similar to what we saw in 2021, okay? The exact same setup essentially, whether it be the range high breakout, failure to sustain, confirming deviation, the rejection from the RSI causing the bearish divergence, and the breakdown of the 62.09 upon the deviation weekly close. I'll say it again. Upon the deviation weekly close, we saw that occur, the confirmation of the weekly 62.09 RSI breakdown. We'll draw it out, okay? Right here, this is where we saw the weekly close occur, which had the deviation, confirmation, and a 62 breakdown confirmation. Let's take a look at the current price action. Exactly the same thing has occurred. Upon the deviation weekly candle, right here, we have also seen the 62.09 breakdown in the RSI. What does this mean? Going back to the 62.09 in the RSI, having printed yet again here, another confirmed breakdown on the 62.09 on the RSI, historically, over the last 10 years, okay, out of the 9 times we have seen breakdowns, 8 times have resulted in corrections of negative 10% or greater 8 out of 9 times. That is a very, 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 very warning and worrisome statistic. It doesn't mean this is going to be the 9th out of the 10th time. It could very well be the time we don't see a correction, right? There is always a risk because this is not 100% certain. It's just showing us the probabilities are in favor of this continuation down based on how the price has responded to these negative momentum shifts historically. That is something we have to be aware of because that would suggest the price action from this weekly open could drop 10 more percent, which takes us to 89,000. Where is that? Well, 89,000, guys, is sitting just under 92,000. Essentially, it takes us into that low historical resistance range and it takes us to the Gaussian channel upper band, okay? And if we break the Gaussian channel upper band, we enter a bear market. So what does this mean? The 62.09 is warning us the bear market has a chance to begin. That is very worrisome. And for us to avoid this, a lot of it rests in the upcoming conflict. Is it going to escalate? Is it going to de-escalate? Will the de-escalation, if it happens, promote enough of a recovery to avoid all of this and cause a weekly breakout? These are a lot of ifs, and there are a lot of buts, right? A lot needs to happen. The probabilities now are in favor of this downward move. Okay, so that is it, guys. That's the weekly analysis. Again, this isn't to spread fear. I'm not trying to spread fear. I'm not trying to manipulate the price down. I don't really care what happens to Bitcoin. I don't hold any Bitcoin currently. As you know, I bought at 16.5K. Okay, I exited the first time on my entry at around 30,000. I rebought at 25 to 26,000. I then held all the way through, telling everyone I was bullish this entire period, telling them I was bullish, yada, yada, yada. And I eventually sold at around 114,000 for my final exit. I did sell at 96,000, but I did rebuy, and then I sold at 114,000 for my final exit, and I've been out of Bitcoin ever since, okay? And I stand by that decision right now, and I said already, if we break 110, I will look for re-entries, but until then, I am still going to be bearish for Bitcoin for corrections. Of course, we did also mention that we would expect a reversal from the 50MA and the Gaussian channel upper band. When we retested it, we did not expect this to break through. We were expecting a reversal from here as we had the positive momentum shift on the weekly RSI. We had that RSI breakthrough, which, if we look historically at prior breakthroughs, resulted in continuation patterns. But again, this deviation setup is something we had only seen before in the weekly once, and that was in 2021 top. So we have to take it at face value. I think that was it, guys. I think I'm going to wrap it up there. I think that is it. The short term, not looking too fantastic. There is hope, but a lot of the hope rests in the hands of things that we don't have control over, of course, and events that we just don't know the outcome for yet. So whenever we have the market heavily anticipating or heavily reacting to external events, which are uncertain, the market is always going to be more emotional. And when the market is more emotional, we're going to see more volatility. When the market sees more volatility, we're going to see more sporadic price action, more liquidity grabs, more chop, and just harder overall times to read. If we move over to total market cap, I'll say it over here, the total market cap has retested 3 trillion. This is a very major level of support, and this does give me some degree of hope. But if we lose 3 trillion, we do see a larger correction, potentially down to 2.6, 2.7. And if we see that happen, guys, well, I think it's very, very likely Bitcoin retests the Gaussian channel upper band. Incredibly, incredibly likely. So there is hope over here. There is a chance for reversal. It is slim. A lot needs to happen. But overall, guys, it's not looking too fantastic. Moving to the altcoin market to wrap it up really quickly. The daily chart, again, it's not looking amazing here, guys. We did see the breakdown of the horizontal, lost a low, pushed down to 750. Again, before we even consider being bullish here on altcoins, we want to see this trend line break. We want to see the baseline of the Ichimoku cloud break toward the upside. Until then, we could just see corrections continuing down based on what the total market cap does. So thanks for tuning in. Have a great day. Catch you guys on the next one. Bye, and I'll see you then.